21,682. That's where the index is at, or 680 thereabouts. And in terms of what's going on with the broader market, it's the mid-cap end of the market. That's where you're seeing a bit of pressure kicking in. In fact, just looking at the overall sectoral indices, you're right. You've got the real estate basket. That's down about 1.5%. Metals as a sector is losing sheen. Pharma, infra, and even IT, that's pretty quiet. PSU banks, that's where all the action is, and that's where all the action has been for the last year as well. Autos in top gear, and FMCG as well contributing. In terms of those individual movers on the frontline index, L&T dragging lower post its results. It's been that kind of a direction. Dr. Reddy's as well. ONGC, JSW Steel, Bajaj Finance, Titan, Britannia, Nestle are some of the key drags. On the flip side, Maruti in top gear, 10,600 levels. Comfortably being held on to. There's SBI Life, Tata Consumer, and TCS. In fact, let's get in a take from our chartists as well. And I just want to look at some of those defense stocks, given that there has been a focus on deep tech technologies as well, Atmanirbhar. What's the view on the reading of some of these defense stocks, Kunal?
Well, I would still believe that broadly the trend for these stocks is very much on the positive side. I think budget was probably a trigger where everyone's expecting that maybe these stocks could get into a further leg of a breakout after a few weeks of consolidation. So I think the likes of HAL, BEL, many of these stocks, they've gone through their own patch of consolidation, slight bit of correction in between this patch of consolidation. But then I think broadly one probably expects that these stocks would remain into a range from here on. My sense is that HAL, I think if we get the stock into a corrective phase, and assuming if it comes back to the 2,750-800 mark, that could be a very good entry point for the stock. Even for BEL, in a similar vein, if the stock corrects and say comes back towards 175, 177 levels, those are classical entry points to look at buying these stocks or adding further.
Naresh, let's get in your take in terms of some of those, tourism-linked stocks, Thomas Cook, Indian Hotels, IRCTC, Ease My Trip, or any of the names that you track?
So the whole segment has done really well. Out of these names, it started off with Indian Hotels. Then we saw Chalet do well. Then it was Lemon Tree, and then one by one we've seen a lot of these names. So the names which are still looking interesting out of this pack is, one is a Royal Orchid Hotels, which has gone sideways and is testing that 370, 380 mark, which was the top made in May of this year. And then again in August as well as in November and December. So that is one stock which has yet not broken out. So that would look promising. And the second one is Lemon Tree Hotels, which has been slowly and steadily trending and has been a slow mover, but the trend seems very positive here. So I would go with Royal Orchid Hotels at current levels, and on any dips, Lemon Tree.
Given the fact that L&T has been in the spotlight, Kunal, on the back of numbers, and then you have the capital expenditure as well that's been hiked to 11 lakh crores in the budget, what's your outlook just in particular on L&T?
So I think this was more or less a correction which happened yesterday for L&T when the stock was down, results when the stock was down 3-4% yesterday, and today it's down another 2.5%. So the intensity of sell-off is getting abated. The volumes which happened yesterday is a chunk of volumes for L&T and today's volume is almost half of yesterday's volume, even though the prices have gone through a follow through on the downside, which means possibly in the next 2 days max, I would probably expect this correction to get arrested for L&T. So in case of the stock, say corrects by another 2-3 percentage points and comes closer to 3350 mark, I think that could actually be a very good contra entry point for L&T.
Okay, fair enough. Meantime, I just want to get in a check-in as to what some of those railway stocks as well are up to. Remember, Jupiter, Titagar Wagons, IRCTC, etc. In today's trading day, remember with respect to announcements on Vande Bharat that did come about. And some of these stocks, of course, have seen a terrific run. I'm talking about the railway stocks. So, Naresh, just wanted to get in a check. Given the phenomenal move that we've seen, is it time for some consolidation? Or are the charts looking promising for railway?
So this is a time where you want to get out of railways slowly and steadily, because the price moves have been very large, but the participation has also become very broad. So for example, if you look at a company like IRFC, it has 32 lakh shareholders. SBI has lesser shareholders. Even an Idea has lesser shareholders than that. So the participation has become very broad based. Momentum is still strong. But whenever this momentum fades off, we'll see a 20-25% correction from the top, and which could be very swift. So out here, the only places you want to go with is something like a Rights Limited, which has not gone, say, a 3x, 5x like a RVNL or all the other railway names. So the only stock where I believe there is still some risk reward left is RITES, which has been a favorite recently. But apart from that, a lot of these names, very high participation across the board. So time to take some profits off.
All right, time to take some profits off. Welcome back. If you're just joining in, we had the finance minister declare the budget at 11 a.m. today, and you could say that there was no big shake announcements, but some of the key factors to keep on top of mind, or some of the key announcements that were made this time around, was that the fiscal deficit, which I think the street and a lot of market men and investors were eyeing closely, that was better than expected at 5.1%, so a comforting factor. You had the capital expenditure. Remember, expectations weren't riding high that there would be a major boost in the capital expenditure, but higher by 11% to 11.1 lakh crore rupees. The net borrowings are expected at about 11.7 lakh crores. They have spoken about this time around no change in indirect or direct tax rates. They will be setting up a 1 lakh crore corpus for innovation, so a focus. Remember, the Prime Minister Narendra Modi as well has been talking about how India is an innovation hub, and the focus was on 4 pillars that the Finance Minister really stressed on during the budget: youth, farmers, women and the poor. So a lot of schemes as well being announced on that front. In terms of the divestment drive as well, you had the FY24 target cut to about 30,000 crores and FY25 a target of about 50,000 crore rupees. The markets, it's no great shakes in terms of a reaction. We're flat as ever as things stand. In fact, it's the broader end of the market or the mid-cap end of the market that's reacting, but it's very stock-specific, individual reactions, results, all of that. Speaking of individual reactions, what's Paytm up to in trade right now? And it's locked in lower circuit. Just wanted to get in a take. I don't know, Kunal, if you track the stock, given all of that's transpired, what should one do? Not touch it with a barge pole?
Yeah, absolutely. Not to touch the stock because, I think, so the stock is not in FNO. It's on a cash side. We've seen the stock opening with a gap down right at the open, when the markets opened, which means that the reaction would probably want to follow through with the next subsequent days. And it's very difficult to try and comprehend that when would the sell-off get arrested for such kind of stock and the news to attach towards the stock. So I think it's always very prudent to try and not catch this falling knife, because it's very difficult to anticipate when would the sell-off get arrested. The recent low, for example, for Paytm, which the stock had hit, I think in the month of December, was around the 592 mark. We are already at 609 levels. Even if we have one more gap down for the stocks in the next trading session, we could be looking at a clear-cut breakdown of the previous swing lows of 590 plus for Paytm. So definitely not a buy and a clear avoid at current levels.
Just want to check in on what some of the stocks within the FMCG sector are doing. Dabur, Marico, ITC, even the likes of a Pidilite, etc. Do remember we spoke about the 4 major groups that the government is focused on: the poor, the youth, farmers. So all of this is going to be very positive for the FMCG sector as a whole. There's a comprehensive program as well that will support dairy farmers, and that's being formulated. So all of that will be beneficial to some of the listed dairy players. For the paint companies, Asian Paints, Kansai, even a Pidilite, the Housing for Middle Class scheme is going to be announced, where they can promote the middle class to build and buy their own houses. So all of that as well is going to be quite positive. And then the Pradhan Mantri Awas Yojana, close to achieving that target of about 3 crore houses. All of that is going to be positive for rural demand and FMCG as a whole. I wonder, Naresh, if you've looked at this cluster, ITC in particular, and what the charts are indicating?
So a lot of large cap FMCG names have gone sideways. So whether it is a Hindustan Unilever or ITC or a Marico. But at the same time, when you look at the mid-cap basket, we have some serious breakouts. So you have a Godrej Consumer, which has broken out. It's made a new all-time high. So that's a structural chart which is very strong. Then you go on the dairy sector side, we've seen clean breakouts happen in Dodla Dairy as well as in Heritage Foods. So that's a basket which looks pretty promising, dairy as a sector, because that's where we are seeing multi-year breakouts. So that's a sector I'll go in FMCG. Same way, ITC has done nothing, but we've seen Godfrey Phillips hit a new all-time high. So the focus in the FMCG side is to look at beyond the top 5 big names, go beyond, look at the mid caps and the small caps. There, the structural trends are much stronger.
Pull up the 1 week chart of a Maruti, and that really has been a commendable mover. For eons, there was always that struggle to cross the 10,000, 10,500 mark with conviction. And now pull up the intraday or the 5-day chart of Maruti Suzuki, guys, at 10,654 levels. Kunal, what are you doing with the top mover on the Nifty?
I think it's a strong case of a buy, Avan, for Maruti, because the stock in the last 2 weeks has seen the worst part playing out. The stock retracing back towards 200-day moving average. In fact, I think for a couple of days, the stock was actually trading below the 200 DMA on a trade basis. I think 97.50-55 was the low the stock had made. Now, from those levels where the stock has more or less arrested the correction towards the 200 DMA, it's made a comeback. Today, the stock has managed to break past about the 50 DMA, so which means that it's completed a worst phase of a correction. I would strongly believe that this is a case of a stock which is likely to hit a fresh new high for itself. So, another 800 points on the upside is what I would expect for Maruti in the next few weeks.
Okay, there you have it. Strong positive trend.